Now, throughout the stock market, especially these days, there's so many of these income-focused covered call style ETFs like JEPQ, for example, that offer investors exposure to an index or a basket of holdings, and then through the use of options, they offer a massive amount of dividends and or distributions, which is basically giving investors a shortcut on earning a massive amount of income from day one. Because comparing an investment like JEPQ to an ETF that's also very popular, I'm talking about SCHD or the Schwab US Dividend Equity ETF, an ETF that offers nearly 1/3 of the amount of yield that JEPQ offers, but has massive dividend growth historically. So in this video specifically, I want to get down to the bottom of it and go through the actual numbers, go through the actual math of what things could look like later on if an investor bought into something as high quality as the JEPQ ETF, which again is one of the best income focused ETFs across the market. And if we were to compare that to something like SCHD, which offers way less income but has much more dividend growth historically. Now you're going to want to stick around until the end because the findings that I found out by going through the math long term honestly even shocked me. So if you're a dividend income focused investor that invests in any things of these sorts, make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, the number one most important aspect about this video, this is it right here, dividend growth rate. This is going to be the main culprit on why certain ETFs can actually outperform others over the long term. Now, dividend growth rate says right here is the percentage growth rate of a company's dividend achieved during a certain period of time. Frequently, the dividend growth rate, or DGR, is calculated on an annual basis. However, if necessary, it can be calculated on a quarterly or monthly basis. And it says right here how to calculate the dividend growth rate, which we're going to talk about more so in a second. But it says the simplest way to calculate DGR is to find the growth rates through the distributed dividends. So let's say that ABC Corp paid the shareholders $1.20 in year one and $1.70 in year two. To determine the dividend growth rate from year one to year two, you would simply use the following formula. You would go dividend growth rate equals D2 over D1 minus 1, which in this case would be around 41% dividend growth. And the important aspect about this video that I really wanted to get across, I'm sure some of you guys are already understanding where I'm going with this. Something like JEPQ that currently offers around a 9, 10, or 11% yield is absolutely massive compared to SCHD's 3.36% yield. Now, long term, even though SCHD pays much less of a dividend starting out, SCHD's dividend growth rate, as you can see, over the last 5 years has been 12%. Now, this is comparing to JEPQ's dividend growth rate, which over the last year so far is -27%. Now, this is simply because these two ETFs, although both do pay income, they pay income in very different ways. JEPQ, of course, with tracking the NASDAQ and utilizing options, pays income to investors in the form monthly, but the amounts are going to be all over the place because it's going to have to do with things like volatility, option premiums, etc. Now, on the other hand, something like SCHD has a history of consistently paying more and more in dividends over time to investors, and this is through things like dividend increases or by SCHD selling off positions and rebalancing their portfolio, etc. So just off of first glance, it feels like something like JEPQ, which at least over the last 2 years or so has traded up and to the right, and on top of that has paid investors like myself, because I'm a shareholder, massive amount of income every single month. Like we said, somewhere around 9 to 10 to 11%, depending on the time frame. It feels like something like JEPQ over the long term would earn investors a lot more over time. But I promise you that's not the case, because I went through both scenarios with SCHD as of right now, as you can see, offering around a 3.5% initial annual dividend yield, $100,000 of starting principal, $20,000 annually contributed from there. Then we have an 11% expected annual dividend amount increase for SCHD, and of course this could go up or down in the future, but over the last 10 years we're talking around 10 to 12% for SCHD. An expected annual share price appreciation around 6%. The dividends are paid out quarterly, and we are going to be reinvesting all the dividends back into more shares of SCHD for this example. Now, 30 years invested, let's see what we get. But before we see the answer to that, let's actually go through real quick and do JEPQ also. So another $100,000 principal with a 10% initial annual dividend yield, which is of course massive compared to SCHD's around 3.5%. 0% expected annual dividend amount increase because JEPQ probably won't raise their dividend over time. 5% expected annual share price appreciation, which is pretty good. The distribution for JEPQ is paid monthly and dividends reinvested also. So this means in theory even JEPQ is going to have a little bit more compounding because the money's going to be going in a little bit faster. Now, Now 30 years invested into JEPQ also. Now let's compare the two and see which one wins. But before we do that, I want you guys to comment down below who you think the winner is based off these numbers. Is it JEPQ or is it SCHD? So SCHD for starters, right off the bat, year number one, we're talking about a $100,000 investment. You're going to earn around $3,500 per year in dividends. Now JEPQ, for example, the $100,000 investment, you're already up to over $10,000 in dividends just from year one. So you're earning around 3 times the amount of income right off the bat compared to SCHD. But not so fast, friends. Things are going to change very quickly because SCHD does have a history and probably will continue to have a history of raising their dividends so quickly. By year number 10, SCHD's portfolio is up to almost $500K with over $27,000 per year in dividends, where JEPQ 10 years in is still in the lead at $577K and $38,000 per year in dividends. So at this point, once again, it still feels like JEPQ would be the better investment, and just based off of the first 10 years, it looks like it. So 20 years down the road, JEPQ would have $1.744 million in theory and over $70,000 per year in income, where SCHD though has taken the lead at $1.869 million 20 years in and around $162K in income. So even though JEPQ started off very, very strong with that $10,000 initial amount of income, which is massive, especially for year number one with $100K invested, SCHD did surpass JEPQ after just a number of years. And if we were to go all the way to the bottom, we're talking SCHD. The $100K plus $20K invested plus dividends being reinvested could, in theory, turn into $8.1 million and over $1.1 million in income per year, where JEPQ, still pretty good, would turn into almost $4 million and almost $100K per income per year. So even though JEPQ right off the bat offers investors a lot more income, around 3 times as much income compared to something like that of SCHD, because of SCHD's dividend growth rate and because of how much more this ETF has paid in income to investors consistently over the years, which at least gives us investors the inclination of it continuing to do so. And again, we don't know for sure, for certain, but it probably will in my opinion. This ETF, as long as it's stuck with the dividend growth rate, which we've seen historically and kept trading more or less the way that it has, an investor over 30 years would have basically doubled the amount of output by investing into the lower yielding ETF compared to that of JEPQ. Now don't get it twisted, I'm still a huge fan of JEPQ, and $4 million theoretically after 30 years invested is still a massive return off of just 100K starting out, but still it just does go to show that dividend growth rate is one of the most important metrics, and one of the metrics honestly in my earlier investing career I didn't pay attention to. I didn't even know what it was. It was probably up until 3 years of investing where I really started to look into dividend growth rate, and I looked at what stocks and ETFs offered a good healthy dividend growth rate historically. And I can't speak for everyone, but for me personally, dividend growth rate is one of the superpowers of long-term investing because you're basically getting paid more and more from the stock or ETF that offers dividend growth rate for doing absolutely nothing. Even if I never bought another single share of SCHD, my 2,200 plus shares are going to most likely, at least based off of history, going to continue to pay me more and more in income long-term, which is only going to help things in the future, like keep up with my expenses if they go up, and not even to mention keeping up with the inflation rate, which as we've seen over the last few years is out of control. So now that we went through the idea of investing into JEPQ and compared that to the power of the dividend growth rate from the dividend growth investment SCHD, I lastly want to hear from you guys down below. When it comes to dividend growth rate, one of my favorite metrics when it comes to investing, which ETFs or stocks do you currently buy that offers a high quality, big boy dividend growth rate as of right now? Drop the ticker symbols in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.